The other options that I want you all to know about, many of you have heard about the stimulus packets that are out there, and this falls underneath the CARES Act. But the CARES Act also has a provision as it relates to those that may be experiencing hardship with paying their mortgages. So when we talk about the CARES Act, what I want you to know is that the CARES Act stands for Coronavirus Aid, Relief, and Economic Security Act. So a lot of times you hear that, and a lot of people don't know what it actually stands for, but that's what it stands for. So under the CARES Act, if you have a loan that is a government loan or that is backed by a government entity like Freddie Mae or Freddie Mac, or if you have a VA or an FHA loan, then you would fall under the CARES Act, where you would be able to see what type of help is available, to you. So like Julio was saying earlier, if you are able to pay your mortgage at this time, then go ahead and pay it. But if you are truly experiencing a hardship and you have one of these federally backed mortgages or loans, then the CARES Act is going to apply to you. So what does that mean? That means that what you are able to do under the CARES Act is you can either get a loan deferment or what is called a forbearance for 180 days. And at the end of that 180 days, if you still need additional, help or relief, you can request for another 180 days. But you have to make sure that you contact your loan servicer. So some of the things that Julio mentioned earlier is that you have to make sure that you understand what the terms are of the forbearance agreement. So you want to make sure that you're getting everything in writing. But with the CARES Act, it specifically states that if you get the forbearance, you will not have to pay it in a lump sum up front. What they will do is give you some different options. And what those options are is that you will be able to pay it back over a certain amount of months after it's over. So it can be a 6-month period. It can be a 90-day period. Another option is they will tack it on to the end of the loan, where you would have to pay it in a lump sum once you get to the end of the loan, or they will be able to extend the loan at the end. So if you're not able to do the 6 months and you got a 6 months forbearance, then that 6 months is going to be tacked on the end. So when we talk about getting a forbearance, that does not mean that it is forgiveness, that you will not have to pay it back. You're going to have to pay it back in some shape, form, or fashion. And another thing under the CARES Act is they will not charge you like any late fees or penalties or anything like that. And then they also say that it will not reflect badly on your credit. But again, you have to be very careful of that, because although they are saying that it will not reflect badly on your credit report, it will state that you are in forbearance. And what I'm hearing from some people is that when that is reflected on their credit report, that has an effect on their credit score. So again, under the CARES Act, this applies to loans that are federal government loans, VA, FHA, or backed by Freddie Mae or Freddie Mac. So you may be wondering, how am I able to tell if I have a government loan or not? So one of the things I want you to know, these are the websites that you can go to. So the website to see if you have a Freddie Mac is www.freddieMac.com/loan lookup. And then you have knowyouroptions.com/loan lookup. So those are the websites that you can go to see if your loan is backed by the government. Now, another thing, and I'm just trying to go real fast, guys, because I'm almost over my 30 minutes. There are 3 questions that you want to be able to ask if you need to ask for a forbearance. So the number 1 question is, what options are available to temporarily suspend or reduce my payments? Question number 2, will you waive late fees, and how will this appear on my credit report? And then the third question is, what about my escrow payment? So you guys know that when you pay your mortgage, escrow is also included in that, and that's for your property taxes and your insurance. In most cases, you are still going to have to pay your property taxes and your insurance. So just make sure that you get everything in writing so that it will not come back to harm you later on. Now, for those of you that are watching, you may be saying, well, I don't have a loan that is backed by the government. What are my options? All you need to do, again, is call your loan service provider and find out what are the options that are available to you, whether it's loan modification or forbearance. The most important thing is make sure you get everything in writing. But if you're able to pay, we want you to go ahead and pay. And then under the CARES Act, there are also some provisions that are there for landlords and for renters as well. I know I work with a lot of investors. So for those investors where you may have multiple properties and you're having individuals that are not being able to pay their rent, and you have a federal government-backed loan, look at the CARES Act, get all of your information before you make the decision to do this. So there is some help out there for you, and I just want to make sure that you guys are aware of it.